Hey, what's going on, guys? Today I'm going to make a video talking about the 3 day trading strategies that can be used by beginners for massive gains, right? So let's take a look at it. So the first trading strategy I'm going to talk about is in terms of using trading small cap, low float stocks, right? I'll show you exactly what it is. So small cap is why you really want to take a look at small cap is there's less institution or market makers, right? If you look at stocks like say Facebook, Google, Amazon, and so on, there's a lot of demand for it. So there's a lot of market makers manipulating the stock. First, if you have a small cap stock, there's less manipulation, there's less market makers trying to move things around, trying to game you, right? So that's one of the reasons why you want to be taking a look at small cap. Relative volume. So what does relative volume means is, let's say the stock usually does about 20,000 shares. If today the stock is doing 1 million shares, right? So now it's the relative volume means the number of interest in the particular stock is now 50 times versus the regular volume. So that's really a key, right? So higher the better. Generally, if it's over 5, it's pretty good. And if it's a small cap stock, you also want to be trading something which has already done about 1 million shares, right? So if you want to take a look at FinViz, what you want to do is you go on, this is finviz.com, you go on screeners, right? You want to do industry stocks only. And a really cool feature on here is they actually have something called small. So under $2 billion is considered small cap. You do under $2 billion. As I mentioned, you want to see something which has a high relative volume, right? So high relative volume, this one is whatever the current volume is versus the 3-month average. So today's current volume is say a million and 3-month average is about say 50,000. Then you know what? It's trading at 20 times the relative volume, right? So in this one, you can play with this R vol over 5. As I mentioned, you want to have something just trade at least a million shares, right? I mean, if it's going to be small cap name, which is nobody knows about it, and now you want to see a lot of interest, which is stuff which has done over a million shares, right? Now, if you take a look on this, we see 9 names, right? So not all 9 names would be tradable, right? So if you take a look on these ones, right? So some of them are like 20 cents, 10 cent stocks, right? They move? Sure, they can move. But really you want to stay away from under $1. So you want to trade something which is over $1, which is now going to narrow it down. Let's do it all so you can see everything that's been put on here. So now you're looking at only a handful of stocks, right? You have TMQ, OSS, NPTN, CDMO, and so on. So if you try to pull it up on your trading platform, right, where you take a look at the intraday movement of a particular stock. So let's see, based on 5 minutes. So the name on here you saw, so this has no range, right? If this has no range, probably you shouldn't really be trading much. Something like maybe NPTN or CDMO, right? Or even IEA, right? So let's take a look at it. So let's say NPTN, right? This is the chart of the NPTN, right? So it has a nice movement, right? I mean, the stock really gapped up from what, 420 to 470, so 50-cent gap up on a pillar stock. Try to make a run over 5, and if you see under 5, the stock has had a lot of trouble going up, right? So I mean, if you are trading a small account, trading $1,000 account, $500 account, then you know what? In this one, if you have a $5 stock, if you have a $1,000 account, you can probably hit 200 shares, right? And this one is a pretty nice trade on this one, right? I mean, it had a failure over, not able to go over 5. You can either try to short it over here after the rejection of 5 and went from 480 to 450. So nice 20-cent drop on this one. The other one that I talked about was IEA, right? So same in this one. I mean, the stock gapped up, right? Not a really massive gap, but still a decent gap. It had a gap up, held the moving average, and went from 250 all the way to 350. That's a dollar move, right? So it's just a matter of how you want to trade it. So you want to trade something which has done a lot of volume, right? If you take a look at, say, something like CDMO, Right. So intraday, I mean, today didn't really do much, but if you take a look at what happened the day before, which is on Friday, this stock went from 450 all the way to 540. Right. So this is a pretty big move in terms of percentages, not a lot of dollar moves, but in terms of percentages, that's a pretty big move, right, for a $4 stock. So that's strategy number one to take a look at. Strategy number two, which is my favorite strategy on here, which is in terms of trading stocks with large ranges. Right. So in order to find large range, you want to measure something based on ATR, which is average true range. Right. So the stock is trading, let's say the stock is trading $20, and if it's average true range means it can range up to $1. So it can go $20 to $21, $20 to $19, or even it can just move between 1950 and 2050. Right. I mean, just the range is about $1. So you want to trade stocks which has a lot of dollar, I mean higher ATR the better. So if it's over $1 is pretty good, right? Relative volume once again has to be over 1 because you want to find stocks which have interest in it. And generally if it's a higher dollar, stock, the volume is not going to be as high. So generally over 500,000 shares is kind of okay. Let's go back to the screeners, right? Go back to the home page. We go on screeners. We go to industry stocks only. R vol over 1, right? And current volume over 500,000 shares. Technical aspect, ATR. This is the average true range, right? So this, if you see the definition on here, talks about a measure of stock volatility, right? So the higher the range, the better. So in this one, you want to do an ATR over 1. Right, so you're narrowing it down to about 132 names in it, right? So depending on, so it's a higher dollar stock, then you really don't want to be trading stock under $1, $2, and so on, right? So generally over $30 is a pretty good measure. Now, if you take a look at the charts, right? So if you take a look at the charts, right? So what you really see on here, if you have stocks like say RARX, right? GWR is probably a buyout. You have Bison, WIN, ACIA, IPHI, right? So let's throw it up in the chart and see what's going on, right? So something like say RARX, right? So this is the 15-minute observation on the particular stock, right? And this is the 5-minute observation. So the stock, what it did, this is the stock on the day, right? Slightly gap up, not really that, but slide pretty much near, right? It went up, had a pullback, it went from $6 to 620. Bad. Sorry, the stock on here is RARX. RARX. Here's the stock. So here's today, right? So the stock had a nice range, went from $30, now it's trading at $33, right? Pretty good range on this stock. I mean, depends on where you want to buy it on the base of the pullback, right? It had a, right now it's doing a run at the end of the day, $32 running up to $33, about $1 move, right? If you want to take a GWR because this is a buyout, Bison, WIN, or ACIA, right? So you take a look at say Bison, right? So Bison, if you look on the daily one, I mean it had some move on here, right? So 53 to 54, nice $1 move, right? If you take a look at say ACIA, this one had a big pop in the morning, right? And it looks like it's a all-day fader, right? I mean it had one big massive move and had a pullback, and every high is gonna kind of get sold over here, right? So that's why take a look at it, right? So if you're taking a look at which stocks to trade, that's one way to take a look at it. And so this is really my favorite strategy because you can take a look at stocks which has historically already done a lot of range. Now you just have to find your spots to get in, to eke out that extra gains out of it, right? Next, we'll look at strategy number 3. This one is trading ETFs, right? These are exchange traded funds. So depending on if you have a preference of what a particular stock, a particular index, a particular sector, right? Depending on which one it is, you can take a look at those index, and generally you want to trade something which has a high average volume. right? So average volume generally over 500,000 shares, pretty good. And you want to have something just currently trading over 500,000 shares. So let's go back on the screener on here. Let's go back to home, screener. In this situation, we won't be doing stocks only. We'll be doing ETFs, exchange traded funds. There's almost 2,000 ETFs. Now, not all of them had a lot of volume, right? Because if you want trading stocks, then you are trading the ETFs, you really want to have something which has some decent volume for you to get in and get out. Because you don't want to be, the lower the volume it is, the larger the spread, higher the risk, right? So if you want to take a look on these ones, so let's say, something like JDST had a lot of movement. So let's do, price again over $30, right? So you want to see something which is liquid enough. So right off the bat, you see something like SOXL, TQQQs, right? So let's take a look at it on an intraday basis. Right. SOXL. So nice range, 170 all the way to 157, so almost a $10 range, right? So you just have to pick your spots in terms of where you really want to get into it. Or something like TQQQ. Same thing. I mean, it's pretty decent range on here, around 65 to 63. I just have to make sure you are picking the right range, right? So a couple of ways you can really play on this one is on the first pull, this is a pullback to go short, or if you really want to be more conservative, that you want to short a stock which is under the 20-day moving average, which is the 20-day moving average over here. So probably this is the first push, right, sideways, and then there's a next push on down here, right? So more aggressive play is over here, trying to anticipate, versus this is a more conservative play. Let things play out. Another 20-day, you want to short it. That's when you do it, right? So those are 3 trading strategies. And number 2 is my favorite one. If you have any questions, let me know. But if you like the video, do like and subscribe. Have a good one.